on the platform, The Color of Real Estate, with Irene Amato, the most outstanding loan officer I know, who is also a sponsor of this platform, in addition to Ability Engineering and Homebridge. I want to thank you all for joining us, and hopefully we will have a lively conversation and try to address some of the concerns that are in the lending arena that we may not be aware of. I'd like to also let you know that this session is being recorded. So any questions you may have, please put in the Q&A and we will address them as we go along. So again, thank you very much for joining us, and we'll get right to it. We do like to start things on time and end on time. So thank you again. Irene Amato, please tell us a little bit about yourself. We have a very lengthy bio and I don't want to take up too much time on that. So please let us know what you'd like to share with us.
So my name is Irene Amato. I'm the owner of ASAP Mortgage. ASAP was established in 2001 from my basement with 3 children under the age of 5. Conference calls in the closet were a normal thing for me back then. They still are if they're home. No. So I've grown ASAP to being one of the largest brokerage firms in New York. I sat on the legislative committee for the New York Association of Mortgage Brokers, so I understand the regulations and I have lobbied in Washington for them. I was the president of the New York Association of Mortgage Brokers, and I am a strong advocate for the industry. I own 8, we currently are located in 8 office locations throughout Westchester County, New York City, going up to Dutchess, with our most recent office in Orange County. We are looking to secure office space in Florida, the state of Florida right now, and fingers crossed we'll have that signed today. And I'm just excited. So my vision for ASAP Mortgage is to deliver the customer service that I would want when purchasing a home, along with the products and programs and rates, and equality to all. So my game plan and my vision is to have an ASAP Mortgage unique boutique mortgage firm throughout the country, delivering that unique experience to all home buyers.
That is fantastic. And I think anybody who knows you within our realtor community knows that you are a force to be reckoned with. So we thank you very much for sharing that information with us. And before we get right into it, I need you to give us a definition of both, a brokerage and bank. If I'm working with you, am I working with a broker or am I working with a bank? What should I be looking for as a consumer in order to be able to try to get the best possible outcome for me?
Okay, so there's 3 different types, I like to say. So there's the mortgage broker, who does not lend money. So that's the main thing with a mortgage broker. We do not lend our own money. We are the liaison between multiple lenders and the consumer. We offer customer service. We offer navigating through different products. I like to say the mortgage broker simplifies, expedites, and negotiates the mortgage transaction on behalf of the consumer. There is a myth that mortgage brokers make more money and mortgage brokers charge additional fees. That is a myth. It is not true. And I couldn't make that statement years ago because there was not really regulations on what mortgage brokers could or couldn't charge, same as lenders. But there had, since Dodd-Frank and the mortgage meltdown, there has been, I think the mortgage broker industry has the most regulated industry, capping our points and fees to 3%. So with that being said, every transaction has to be the same amount of income. So the commission has to be the same across the board, whether you're doing a co-op loan, an FHA loan, a VA loan, a conventional loan, a buyer with 800 credit score, a buyer with 600 credit score, doesn't matter. So there is no additional fees to use a mortgage broker, and they're shopping multiple lenders. I mean, we have over 40 different national lenders to work with. So for instance, if you were to walk into a banker or a federally chartered institution to get a mortgage, you're going there for that one product. Whatever product they have, you can purchase, you can have, right? They're not going to tell you what their competitor has, or to go down the street and they're offering a program. And yes, that for some consumers, that means that they might not get the best rate, right? Or they might not get the exact program they want. But the more detrimental part is, for some consumers, it may mean that they're turned away for a mortgage when they can get a mortgage. It's just that lender doesn't have that program, or that lender doesn't go down to that credit score. So that's really the disconnect, because once a consumer gets that fear factor gone and they get the energy and the confidence to go in and actually apply for a mortgage or try to see what they can afford, if they're shot down, they're back to renting. And usually they start to look around their lease time. When the lease is up, once they sign a new lease, they forget about it. So that's really a good point for a mortgage broker versus the banker or the federally chartered institution. Mortgage brokers are held to the highest standard in the industry. We have, obviously, I just said the highest regulations, but we also have passing the state and federal tests. We have continuing education that is monitored. And those are two crucial. I feel like everybody in the industry should be passing this test.
Wonderful. So I mean, what I'm going to get from this is that it's a good idea to not be afraid to use a mortgage broker, because you will shop it around and try to get me the best possible outcome.
Right. And obviously mortgage brokers are small businesses, right? So the amount of advertising that we can do is limited, right? So people see all these lender advertisements and sometimes they forget that there's that mortgage broker there that can shop rates and can do these things. Now we have made a big change and impact in the industry where some bankers, our wholesale bankers are actually advertising mortgage brokers as well as their retail channel, which is fantastic. So then there's the mortgage banker, Dorothy, right? So the bankers, passes the test, has the license. They, again, work for a bank. So they're limited to that bank's products and programs. Then you have the federally chartered institutions, which work for those institutions, but they do not have to pass the test. It is not regulation that they are not licensed loan originators, they are registered loan originators. And that's a big difference that a lot of people don't know. Doesn't mean that they're not as qualified. I want to clarify that. I have some great, amazing loan officers that I know that work for federally chartered institutions that the banks themselves will not allow them to get licensed.
Oh, wow.
So it's not that they can't pass the test. It's just that they're not allowed to. It's not a mandatory thing. And they're not even, if they apply for the test, it's not even going to be recorded. They can't if they're working for that institution. So I just want to put out there that there is good and bad in every one of these three channels. What I tell consumers is research the individual and the company. Don't research rates. Don't research what you're being told, because you need to work with a true professional. Once you have that connection with whomever of these channels it is, you're going to get the best service and the best rates, because obviously if you've researched them and there's good reviews and there's a consistency, you'll feel comfortable that you're getting the whole package. Don't do it on your own shopping rates, because until you have a product until you have a home and a signed contract, it's very hard to lock in a rate. So the rates you're being told may not even be the rate that you're going to end up with if you're not locked in.
Exactly.
So if you go with someone based on rate and it changes, that's a problem.
Understood.
It's very problematic.
Okay, that's really good to know. So I'm glad we've got that out of the way. So I want to go right into fair lending. Last week, we talked about fair housing, and we know that with regards to any sort of protected classes that are in our arena that we do business with, we have to try to be fair. So your fair lending platform here, we want to know what fair lending is. What is the fair lending about?
In an easy, simplified verbiage, it's the unbiased treatment for all consumers, right? It's
why do you think we need that? The unbiased treatment for all consumers. I understand that. So maybe if I'm a loan officer, feel a certain way about a particular ethnicity, maybe my bias will come through. But do you think we really need fair lending? And if you can expand on that, I'd like that.
I mean, absolutely. And I don't think we're anywhere near where we should be with it. It needs to continue to be tweaked. And, in 1968, right, when we had the civil rights movement, is when it came about, right? We realized that there's a discrimination happening. And again, it goes back to the consumers don't know their rights. So they were accepting the treatment that they were given. Until we create these regulations and laws, and not only create them, but do what you're doing right now, people don't know they exist,
Yeah.
right? So that's the big disconnect. We can create whatever we want, but if you don't promote it and actually explain to consumers what their rights are, they don't know. So it's twofold. I think that the regulations obviously need to be in place to protect the consumers. We don't want businesses or lenders that are out there, and it goes across everything, but we're talking about fair lending. We don't want them out there that are just creating an environment that works for them. It has to work for all. It has to be a service to the consumer that is equal. And without these laws and rules and regulations, it's not equal, because it may not be what the lender chooses to do. So I feel that there's two parts. It's about implementing these and perfecting them and continuing to revisit them as instances come about. Because every time, what I find, I've been in the industry for 30 something years, every time a regulation is put in place, you always have that limited few that will figure out a way to get around it.
Absolutely.
So when they do that, then that's when people like us and people that are following these things and the consumers need to stand up and say, this happened to me and this happened to me. And that's when we find out about these new instances or new types of discrimination and add them to the laws, rules, and regulations.
So there has to be some form of education that's ongoing for the consumer to be aware that they have rights that they can turn to and resources available to them in order to make sure they're getting the right service. How
Yep.
do you guys promote that?
So the CFPB was originated, and they definitely are on top of providing the consumers with education and
Sorry, what's the CFPB?
Consumer Financial Protection Bureau.
Thank you so much.
That's fine. And you always catch me on that. And they, so their job is to make sure that the consumer has availability to these rights and regulations. There have been things where now they're implemented in the actual loan application that the consumer has to sign, that they've gone for training in some programs. They have to be made available, specific training centers or informational centers that they can go to with the addresses and the phone numbers. So there's a lot more things now than just telling them. Now we're providing them with documentation that shows them.
Okay, that's great. I think one of the, I looked up the whole fair lending. I had to go in and take a look and make sure I understood what we're going to be talking about. We also have the Equal Credit Opportunity Act. There are some laws that are on the book. Could you just give us a little bit of clarification in terms of what they actually do for the consumer?
Well, across the board, ECOA covers multiple things, but it's basically the delivering of equal credit to all consumers. So it doesn't mean that if you have a 580 credit score, you're going to get the same rate as someone that has an 800 credit score.
Sure.
That's not what it's about. It's more about making sure that the credit is available to that consumer.
Okay.
It makes sure that they're not shut out. Okay.
That's good.
But there's a trickle side to it. You can't offer a consumer, you can't say, I'm not going to do a certain loan amount because we don't want to lend on that. It's too much risk. You have to prove the risk and then make the policy.
Okay, but just to stay on that for a minute, because sometimes and again, that's why I wanted the definition of a loan officer and, a broker, because sometimes you work with certain loan officers who say, well, they're not going to lend below $90,000. And I want to understand why. If I'm buying a co-op for $50,000, I can't get a loan for something like that. Why? Is there a limitation within the industry? Or I just thought that anybody should be able to get a loan for whatever amount as long as they're qualified to do that. Is there a limitation on what size loan you can give a consumer?
It's a slippery slope. So as a mortgage broker, I can tell you that if I have a lender that goes down to a $20,000 loan amount, which I do, all day, every day, I have to accept a $20,000 loan amount. If I make a business practice that I cannot do that based on the profitability, then as ethically, I would remove myself from that lender that offers that product if I don't want to do it. You can't, and also if you are making that policy, you cannot stray from that policy for a different race or religion.
Exactly.
You cannot say, I'm not going to do a $50,000 loan amount for Mr. Rodriguez that walked in the door because I just don't want to. But you know what? This client who happens to be a white person has been giving me business for years. It's their son. I got to take care of their son. I'm going to do the loan. If I don't take care of them, they're going to go somewhere else and then they may put all their business there. No.
Excellent. Excellent. So basically the treatment has to be the same across the board. I
Right.
can't.
And you have to demonstrate, and also it's a fine line. You have to offer the products that are available. And I'm going to go a little step further, Dorothy, and cut me off when you want.
No, that's all right.
You also have to be very careful when someone's coming to you for a $60,000 loan amount. And in your world too, there's testers that will call originators and say, hi, my name is Mr. Rodriguez. I'm looking for a $40,000 loan on, and they'll even say, within 10 minutes, you'll get a call for $1 million property. If you call the $1 million property back and not the 60,000 or the $40,000 loan amount, that's a problem.
Oh, so you also have testers in your industry. That's wonderful.
Absolutely, absolutely, and I welcome them. I think that without them, I wish we had more of them.
Oh, I think that's great because, since I do residential, we practice residential real estate, we currently have a lot of testing going on. I think one of the best things that we needed, and I think it makes us better because we do have to treat everybody equally and to the best of our ability, return every phone call. So I think that's absolutely a great point. But let me ask you, if you are found in violation, what sort of fines and penalties are out there that I may be assessed as a loan officer?
Well, okay. So it varies per loan officer, mortgage broker, lender, but in fair housing, it's $16,000 for the first, $37,500 for if you have a prior and you're doing it again, and then $65,000 if you've done more than 2 in 7 years, right?
Well, pretty much, if you're a frequent flyer, then you get more fines.
Eventually, you'll get shut down. I mean, see. The fine line is that the reason I welcome the testers and have actually fought to have them in our communities is more so because some people are, let's not say everyone that's violating this is doing it on purpose.
Sure.
There are some people that are doing it because of lack of education. They don't understand it. They're saying things because it's just rolling off their tongue, right? So, and they're not understanding the ramifications or the fact that they're even violating anything. So if you have a tester and you're then confronted, not only does it stop you and educate you, it also is brought to the attention of everyone in your community. So it's now raising more awareness. So it doesn't necessarily mean that I think that the agencies look at things like that, right? They monitor it, and it's just like I said, it's more education. The more we have out there, the more educating it is.
So that's
everybody.
No, go ahead.
No, I'm saying to all realtors, consumers, loan originators, mortgage brokers, lenders, everyone.
So that's very good. Now let's go on a different track now, because I'm originally from Ghana, West Africa, even though I'm a naturalized US citizen. If I just came to this country and I am not a citizen yet, and I have another pathway to purchase property, therefore I'm going through the loan process, do the fair lending laws protect me? Do I have an avenue where, if I respond that I'm a citizen or not, do you still require more information? What is the protection for an immigrant buying in the US?
You're covered, right? You're covered under the policies and regulations and laws. And so it's funny, I'll give an instance. I don't want to use like the technical because I'm not sure. I want to try to put it in.
Keep it simple. Yes, ma'am.
So we had an instance where a certain class of people applications was consistently with one lender, consistently, there's the demographics and you put what your race, religion, and consistently was asked, they put down US citizen. They were consistently asked to provide proof that they were a citizen. And it was a consistent thing with one lender, and we brought it up for a violation and they were violated because you cannot consistently ask. Now, if across the board, your policy was to ask for, citizenship, proof of citizenship, and you have provided proof that not asking for this, caused you detrimental and you got it as okay in your policy, but you can't pick and choose who you want to ask it to. Right. So if someone puts on the demographics that they are, unless you have a reason behind it, if you have pulled up something from data that shows that that might not be accurate.
Sure.
But if other than that, it was consistent on every single application of this race.
Well, that's great. I'm glad you were able to flag that and take it a step further. So it was addressed. So that's good to know that they are, active loan officers, mortgage brokers, taking a good look at the application and the process to make sure everybody's hopefully getting a fair shot at monies that are available for them to purchase a home.
Right. And I want to just say 1 second, Dorothy,
Yeah.
any loan originators that are watching this, mortgage brokers, you have to know that these large lenders do get fines. They get sued. They don't do the right thing sometimes. So don't always adhere for your consumer what they're telling you. Like, you have to stop, you have to do your training. Don't do the bare minimal training and don't just push your keyboard, because you're not doing any justice to the problem or to solving and helping your consumer. So when you hear something like that, where they're asking for something, a lot of loan originators just say, oh, the underwriter wants it. Let's just provide me your visa just to show them. Or just provide me this just to satisfy that condition, because it's the quicker and the easier way. And it's also the easier way for the real estate agent, right? Let's be honest.
Absolutely.
There's definitely agents that will call and say, are you kidding me? This should have been cleared. They provided you with this. And I get that. But if I don't put a stop to it, it continues to go. And then eventually it affects us all.
Absolutely.
So that extra day or two that it takes my company to fight that and show the lenders or the person, we're not standing for this. This is not going to happen, at least in my communities. I'm not going to change the lender for every community. We know that. But if I'm an advocate for our community, it's going to stop, and it stops here. But if other loan officers don't know this and they're not educated on the policies, regulations, and laws, they're not going to know. It's the easiest way out. And I never take the easiest way out.
Oh, of course, I know that. That's why you're here.
So it's important to let them know, brush up on your regulations, brush up on your laws, understand what's right, and look at your conditions and say, no, I'm not providing you with this. I'm not providing you with, and I'm not allowing you to not use my maternity leave client's income because it's not going to last for 3 years. No, I'm not going to allow you to tell me that this is not a primary residence. I'm not going to allow you to tell me that, there's so many things that you can fight, and we just give in because it's easier.
Exactly. And sometimes we give in, we walk away, and then it happens to the next person. If we don't advocate right now, there is no way of trying to stop that sort of discriminatory practice.
And I don't know if you want me to go there now. If you don't,
I want you to go there right now, because we're going off the rails. Just go ahead.
Right now, what's the major concern, Dorothy? Right now, what is going on with our low income, affordable housing, 3% down payments?
Absolutely. As a realtor, we see where, based on the fact that it's a seller's market and it's taken off and it's an absolutely nutty time to be purchasing anything, most of our people who are in a different price bracket, with definitely not the 10%, 20, 30% out there, they're being shut out. And as a real estate agent who has buyers who may want to put up at 3.5%, very well qualified, qualified, have been able to go through the loan process, have received documentation that they're able to purchase. In my residential arena, also, we do have some level of discriminatory practice. And this to me is based on the inability. If there are FHA guidelines that say we can put down 3.5%, why can't we present that to the seller? Go ahead.
So my question to you
Yes,
is, because I know what's coming back to me,
Yes.
right? What's coming back to me is waiving appraisals, and it's the way that business is now. That's it. It's impossible to survive as a realtor without adhering to certain things that the sellers are demanding. And there is no real regulations on the sellers, is there?
No, there is no real regulation on the sellers, but there is regulation on the realtor community, because we have to be educating the consumer as to what's available to them, the same way you as a loan officer has to, or a lender, a mortgage broker, have to educate your customers that come to you. So when I have for example, if I have a listing and I don't explain to the seller that regardless of who's coming to the table, they are qualified and can close, then I'm doing a disservice to the consumer. If I'm saying to the seller, well, a 10% or 20% down is, it's a guarantee, and you're waiving appraisals, I think that's the most detrimental thing. You can have
I'm playing devil's advocate. How do you survive as a realtor right now? And it's not, so what the realtor's concerns is a listing of a property, right? So they list that property, they get 35 offers.
Yes.
The first 5 are higher, and they're 3.5% down.
Absolutely.
They're higher.
Yes.
Now, the realtors and the client, the seller's fear is the appraisal at a 3.5% down payment, or 3% down payment, let's call it.
Okay.
If the buyers have no additional funds and the appraisal comes in low, there is no way to fix that deal.
No, there isn't.
It's negotiating so the sellers don't want to be put in that position, and they're saying, I don't even want to see 3.5% down or 3% down if we have other offers. So how does a real estate agent really navigate that? We know what it is, and we know what's going on. And I've had my FHA or my affordable housing 3% buyers call me up hysterical, crying. They have nothing to buy. No one will even take them out, which that's a fair lender, fair housing violation.
Yes,
but
ma'am.
They will not, and that's something to be brought up. You cannot tell a client, obviously, that you cannot take them out because they don't have that, they only have the 3.5%. But on the lending side, because those offers are not getting accepted at all, very rarely, I'm finding that a lot of buyers are being turned away to even get pre-approvals because the lenders and the loan officers are so busy that they want to work on the ones that are going to get the accepted offers. Fair lending violation.
I agree with that. And I think, and I'm going to stay on the residential real estate agent side of it, because as a fair housing advocate also, and I try to be very ethical, I believe that we do have to take everybody out. But in going to your 35 offers and 5 or above asking with all these down payments and whatnots, I think the other day I got an agent who told me, well, this is not how business is done here, because the buyer was putting down 3.5%. And I said to her, I think you forget who you're talking to. I think it was one of those, I said, you must be out of your mind. What the heck are you saying? We don't do business like that here. And so I sent a communication to say, I need to have the seller sign off that they don't want the offer, or have noticed that it was presented. Whether or not it's acceptable to that real estate agent should not factor in their ability to do their job, because again, it's a clear violation of our code of ethics. But I thought it was quite ballsy to say, we don't do business like that here, because it wasn't at 20% down. That was outrageous.
Awful, 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 awful. And I think real estate agents would welcome something, honestly, that I do think the government needs to stand in, and the agencies would welcome some kind of regulation saying that, because I welcomed all of the lending regulations with open arms.
Yeah.
So I feel like the real estate agents, and it's something that I'm interested to hear, would welcome the agencies stepping in and making a regulation that in a real estate transaction, an appraisal cannot be waived.
I think that would be fantastic
Or
because
a temporary order.
I
What's happening now is we're artificially inflating the market. So
we
we're setting ourselves up to be where we were in 2006. Now I get it. It's a catch-22. If you don't it's the same thing as 2006.
yeah.
I chose not to dabble in the, subprime deep products, the prepayment penalties. Yes, I made a little less money if I didn't give a client a prepayment penalty, but you know what? My clients were able to refinance. Yes, I didn't do certain programs and I lost the deals to my competitors, but my competitors went out of business 6 months later. I didn't. So I understand if you don't, it's almost like the bully in the playground, right? If you don't go on the bully side, you're getting bullied, right?
Exactly.
So it's the same thing, but it's really about our ethics. But again, if they don't adhere and say, okay, waive this appraisal, get your offer, their client's not going to get offers accepted.
And
So it's like a catch-22. So I think if something temporary order went in place, which is a no-brainer to me, because right now, if anyone is clearly watching the industry, like all of these agencies, you have to know that it's being artificially inflated. This is my opinion. So how do you stop that immediately? A temporary order saying everybody has to have an appraisal, or the appraisal waiver. So then you kind of level the playing field out, because if you have to have an appraisal, then you have the cash buyers coming in and they can't control the cash buyers.
No, we can't control the cash buyers at all. And cash is king for some people. But I think that the education on my end as a real estate agent with my buyers, I've always told them you don't get to waive the appraisal. But in the frenzy of the marketplace, where listing agents are now calling you and saying, well, Dorothy, your buyers must waive the appraisal. And I say, where does it say that? You must be crazy. That is not me as a buyer's agent looking out for the best interest of that client, especially since you know the house is $100,000 inflated.
And waiving inspections
to you. I have to bring the buyer to you.
Waiving inspections.
Oh, they're waiving inspections all the time. That is something, but it's just the appraisal for me. It's a very big sticking point, because I think that it leaves people wide open. And since the worst part about this is I am an REO agent, I work with foreclosures. I will be seeing you in 2 years because that house is overinflated. The prices are coming down and we see a change happening in the market. So there is nothing. So you have this house, you paid $750 for it, should have been purchased at $575. Now you're upside down in a few years. It doesn't make any sense. So the education on the part of the real estate agent, and also making sure that the mortgage broker, in this case, you, since I've got you here, that I'm working with is reputable, ethical, and will do the right thing for the consumer that I'm sending over to them. So you and I have to be on the same page and educated enough to want to do the best possible thing. Maybe we won't make as much money, but we will have a stellar reputation to go along with our doing the right thing for
You'll be able to put your head on the pillow at night.
Absolutely.
It's not even what you do when people are looking at you, it's what you do when people are not looking at you, right? That's my motto. So but again, I need to go back to I understand the agent's point of view. I understand the consumer's point of view. It's a very hard subject right now to deal with, especially as the mortgage broker, where I have to see a transaction come across my desk where they've waived the appraisal, but they've waived the appraisal, and they're a 3.5% client that doesn't have the money.
Yeah.
So basically for me, I have to know that is setting them up to lose their money. Basically, I call the attorneys, but it's a fine line to what we can do. But if we all get together, that's the thing. If we all get together and kind of understand what's going on and see the bigger picture, it's not about the short run. It's about the long run. And believe it or not, and you saw in 2006, and I say 6, I know it was 7, but I saw it in 6, so I know. I saw it in 05. So it's coming together to understand like what we're creating. And I have to tell you, it will vary per community, the damage done. The damage done will vary per community, meaning different areas that are really not grasping it and not getting the education are going to be encouraging clients more and more versus the areas that maybe want to keep that inflation down and keep the housing market going at a slow pace. So you can control your areas. Do you agree with that?
No, I agree with that because I think in the 2006, 7, 8, where again, going to the other end of my business, where, we had the REO markets, the foreclosure markets, you saw a higher level of foreclosures in minority neighborhoods. When in having a discussion with them, you'd realize that there was no real education because we got the interest only payments. And then it turned over in a year or two to huge balloon payments. It was insanity.
Because the uneducated borrower was signing a document that had a prepayment penalty in because the loan originator was getting paid more money, or the entity was getting paid more money to add that prepayment penalty. Not a lot, by the way. And they didn't understand what that prepayment penalty meant to them. They just were, and they were told, a lot of them were told, if you take this 3-year prepayment penalty, you're going to save 1/8% on the rate, right? I said the opposite. I said, don't take that prepayment penalty. It's a difference of X amount of dollars in your payment. It's going to lock you in. It is a 5% or a 4% prepayment. You're not going to be able to refinance if things go. Don't take it. You want to sell the property, you're limited. So it's all the way you explained it. And most of the minorities signed that's what put them in foreclosure. It wasn't simply the fact the loans went away. So they were pre-approved or closed on loans that were no income, no asset. Those loans were no longer there. So now they clearly didn't qualify based on their regular income because they didn't qualify the first time on their income. Yeah. But there was a way to fight that and go back to the lenders and say, hey, you need to redo this loan based on the criteria. But they had to prepay $25,000. There was no equity in the property. So therefore, they couldn't refinance. They were house locked is what I called it. Like they couldn't get out of their house. So they had to walk away.
That's crazy. I mean, you can look at the frenzied market right now. You can see where, and just to stay, let me go back a minute. You mentioned that no income, no asset verification. Do we still have those? If you have a pulse, you get a loan kind of thing?
They're coming back.
It's coming back?
It's coming back. And I get reprimanded where you don't offer this. And we do. It's just, we have a regulation that came down, which is the ability to repay. And everyone's forgetting that.
Absolutely.
But the trick is it's in QM loans. So the ability to repay, you really, ethically, I feel like if I can confirm the client can pay the mortgage, I'm okay as the ability to repay.
So hold on. Wait, you said something QM loans. What are those?
So it's a qualified mortgage. So that's part of the Dodd-Frank rule, which allows for the 3% cap rule. So here's a perfect example is in the QM regulation, which is the Dodd-Frank, it mandates that 3% is the maximum compensation, combining certain fees for a loan that can be made, right?
Yes.
Now, think about, that's perfect. That's a great regulation, right? Because it's all the same amount of money, but on the lower loan amounts, right? If you even if you're making your 3% or your 2.5%, because there's other fees in place, it's impossible to close the mortgage and call it a QM mortgage. So you can't close the mortgage because it violates the regulation. So it's actually discriminating against the affordable housing, and it was put in place by CFPB.
Wow.
But they can't, it's the problem is we need a lot of voices and explaining how it's affecting, and I've been lobbying that for years, it's actually reversely affecting the affordable housing market. Because there's some loans that while I can do them, right, I can't do them. I can do them based on we offer the product, we offer the loan amount, but I can't do them because when it gets to closing, it fails QM.
Wow. So then you go through the entire process, then you can't close it.
You can't because of the regulation of QM.
Got it.
Because the loan amount's so low. If I'm doing a $20,000 loan amount, I can't close it. It's
Sure.
impossible.
That's
So,
great.
so the agencies have recognized this, and every year they're raising the dollar amounts on the lower loan amounts,
Oh, okay.
trying to correct it. It's just, you know as well as I do, one word in that verbiage, it could be one word that knocks it out.
I agree. Wow, that's very interesting. That's good to know. That's good to know because then it allows me to be able to actually partner up with the right mortgage broker, and that would be you, obviously, to make sure that my loans are getting my consumer, my customer that I'm sending to you, the client I have, is being treated fairly and they're being educated on what they can and cannot have or what they can and cannot do in order to purchase, continue with the loan process. So that's really good to know. That's really good to know. You know, what I also wanted to talk about, since we're talking a little bit about discriminatory practices, we have redlining, and the definition of redlining would be a form of illegal disparate treatment in which a lender provides unequal access to credit or unequal terms of credit because of race, color, national origin, or other prohibited characteristics of the person. Now, redlining is just, for example, if I live in is it like if I live in a particular zip code that you would not lend to, or in a particular community, how does that actually work in the lending arena?
I like to say it's like the lenders put a big red line around. I mean, I think that's how the name came about, and I'm too young to really know how the name came about. No,
Let's not age ourselves.
it's putting a red line around a specific area and saying that we don't want to lend in that area. But the way that it comes into discrimination for minorities is most of the times that's a minority area. Okay. So what are they doing is they're just creating an environment that's even more detrimental to that community rising above. If people can't buy houses, fix them up, and make the community better. So it is specifically for communities redlining, lending or advertising to that community, or just wanting to do loans there.
So that would be the redlining. So now something like that would be having a disparate impact on that particular community, because even though the policy makes sense, it's still affecting a particular group negatively, right? Would that be?
The best way to explain that is what I just did with the 3% QM. It's the same thing that created the impact because, and it's the best way to say it wasn't intentional. Because okay. I like to put out there that it's not everybody that violates this is doing it deliberately. Most of the people don't even know. So here's a program that was put out to help consumers, but yet it gave that disparate impact because you cannot lend to certain people that are affordable housing. So that's a perfect example to put you in to that, to understand that.
Okay. Now, the other thing that I really wanted to just try to understand, I mean, we've talked about the laws that are on the books where, mortgage brokers have to abide by. I'm going to stick with mortgage brokers because I want to talk about you. And I really appreciate the activism and the advocacy on behalf of the consumer, and also trying to make sure that your industry is playing by the rules. Because when we send people to you, I always say we vet our loan officers that we are partnering up with, because we have to make sure whoever we're dealing with is going to be on the same page as myself. But assuming that the product that you have, of course, you're going to, educate the consumer on what sort of product is going to work for them. We're going to move past the interest rate, but what's in their best interest. So apart from credit, the FICO score, the credit, what else do you look for from the consumer in order to make sure that consumer is a worthy candidate to get a loan and maintain their payment? So I want to make sure I'm qualified to get a loan from you. What's your criteria that you have to adhere to? And how do I make sure that I stay in that property?
So we're a mortgage broker, so we don't have a specific criteria because we don't lend the money, but we do have the criteria of the lenders we use. So that's why it's great, because we have different criteria. Every lender has their own products, programs, and different criteria. One lender may do a higher debt to income ratio. So that's your income versus your debt, right? And your income including your housing expense. Some lenders may offer more, some lenders may not, some lenders may have a unique program. So that's the beauty of it, right? So when you say what criteria, I'm going to talk about across the board. If we were talking about you, what I would, the main criteria would be your credit score, right? But not just your score, also your actual ability to repay. So some people will have an 800 score and they can have, 10 lates on a recent payment. It's just, there's our kooky things out there like that. Some people can have a score of, let's say 680, but they pay everything on time.
Exactly.
So credit bureaus can be a little wacky. So it's the credit score, the credit criteria, which I like to say a lot of loan originators will look at the credit score and continue to go on, and they don't even realize that on the collection section, they're past due on a student loan, right? Or a government. So they don't even realize that because the credit score is good. So you really got to dissect the actual credit report as well. And there are some things that you can advise the client for the credit report that they can fix, right? I had a client that came that had all authorized users, and the authorized user was late on their account, but it wasn't my client.
Yeah.
User, give him back his cards. So you have to dissect the credit. The income obviously matters based on what you're qualifying for. The stability of the income.
Okay.
Right. The type of income.
What do you mean stability of the income? What does that mean?
Well, if you're working for a company for a month and you haven't worked for the past 2 years, we just have to explain it.
Got it. Okay.
Right? Now, if you've worked for a company for 10 years and your income was $20,000, and now you're coming for a mortgage and your income is miraculously $100,000 a month before you came for the mortgage, we have to find out why. And it doesn't mean we can't use it. We just have to document it. We have to figure out why. Why did it go high? Were you training for something? Were you in to get a different, position? It just needs to be explained, but it has to be understood, and you have to really dissect it. So it's income, assets, credit, and assets are really to cover the transaction, but also you want to look at assets as a part of this whole thing we're talking about, waiving appraisals. Like, you need to educate the consumer. If you waive the appraisal and you don't have the difference of the assets, that's a problem. Absolutely. And we're seeing a lot of appraisal waivers unlimited. So what do? Even if you are a buyer that's willing to put money down if the appraisal comes in low, what if you have a buyer that, has $100,000 in the bank, but the appraisal comes in 200 lower? Just let's say. Yeah, that's a limit. I feel like there's got to be some kind of end game, right?
There has to be. It can't continue.
Even if you're willing to waive the appraisal, or I mean, some people are not even getting it, but even if you're willing to say, okay, I mean, for a mortgage, you have to get an appraisal as long as you don't get the appraisal waiver. And if you're getting the appraisal waiver, the value's there because it's documented over the course of, 10 years now. So if you're getting an appraisal and waiving that on your mortgage portion, which it's not really, you'd have to have an appraisal contingency in there. But anyway, you have to kind of have a dollar amount. Like, what are you waiving up to? Are you waiving up to 100,000? Are you waiving if you're purchasing the home for 600 and it was listed for 580? Are you going to waive it down to 580? Or are you going to waive it down to 500? That's what I feel. So I have that conversation. Well, my team has that conversation with they're trained to do we have sales meetings that educate them on the regulations, and they understand what to say and how to explain to the consumer the risks that they may have on the lending side. So debt to income ratio, job security, second jobs are a big thing. A lot of people get a second job because they think that that's going to add to their income. If you don't have it for 2 years, we can't use it.
Oh, okay.
And then there's the flip side. You have people that are getting income from Section 8 housing that are getting turned away.
Yes.
And we can't use it. You can use it. Like, there's rules and regulations that apply that you have to use it.
I can use my Section 8 housing as income?
Yep.
Wow. I didn't know that. I've learned something new today.
Well, public assistance. Yes.
Sure.
It's a program within it, but yes.
Oh, I understand it. But then let me just move this a little bit here. Can I use my telephone bills, or has there been any sort of allowance made for using, let's say I don't have a whole lot of credit, but I have good income. Can I use my bills, my telephone bills or
Absolutely.
utility bills to
Absolutely. Absolutely. And one thing that really gets me is we turn, not we, but our industry is a fan of throwing people at these credit repair companies.
Yes.
There are credit repair companies that I think are amazing, right?
Yeah.
And certain clients need them. But there are things that we as the mortgage broker can do
Yes.
that will help the consumer and offer them to navigate it themselves if they choose rather than pay fees.
Oh, like
Such
what?
as, such as what you just said, getting
Oh, okay.
credit card bills, gym membership, cell phone bills.
That's fantastic. So I don't necessarily need a credit repair company, but by having an open and clear conversation with you, we would be able to find other avenues by which I can make, qualify for the loan product.
Right. And I just saw a video on recently of a realtor, of a loan originator, on video telling the clients, if you want to get a mortgage and you don't have credit, just go get a prepaid credit card. Like anyone can get one. And this is just go put $500. You give them the 500, you get it, bam, it's on your credit. And it's like, this is the fine line, Dorothy. There's rules and regulations.
Exactly.
And then there's also ethics.
Sure.
So sometimes, and you and I talk about this often, sometimes you might not be breaking a regulation and you might not be really clear cut violating something, but your demeanor and the way you're talking to a specific client is.
So depending on how I feel about your communication style with me could be violating something, really?
Well, if you can prove a pattern of this type of behavior across the board to a specific minority, yes. Wow. So if, for instance, someone came to a loan originator, different religions, different races, and the loan originator, they had the same credit history, not such perfect credit. And the loan originator consistently spoke to, actually, I'm going to tell you a story.
I can't wait. Let me sit back on this one.
So I helped one of my clients that became like just a forever friend, a senior citizen. And she's an amazing woman. And I helped her obtaining financing, and I've become like her go-to. She calls me. Even when she has a leak in the house, she calls me, even when So she wanted to go shopping for a car. And who did she call? Me, right?
Called you.
So I'm down in the White Plains office and she says, I'm at the dealer and, I'm so nervous. And I'm like, you know what? I'm down the street. I'm going to pop in. So I pop in and I'm just sitting there. I don't know. The guy doesn't know who I am, nothing about me. And the salesman talks to you first, right? And everything's great. And her payments, let's say, $200 a month, and it's within her. So now you go to the finance. It's like going to the principal, by the way, when you go to the finance office in an auto car shop, right? So we go in there together. And he says, oh, you could wait. No, I'm not waiting outside. Do you give me, I'm coming in. So I come in, I sit down. I'm just quietly sitting there. He has all these papers out on his desk. And he picks one up and goes like this. Let me just use a fictitious name. Lisa. Oh boy, Lisa. And I'm just sitting there. And like, at first I'm like, oh, I'm just going to listen to the numbers. And I just pick my head up and I'm like, what? And he goes, you've been a bad girl.
Shut up.
I'm sitting there, Dorothy, I couldn't believe so he said, senior citizen, she goes, what did I do? And he goes, why are you making your payments late? He's
what?
Like, you think you're going to get a car with this? And I'm just sitting there and I couldn't even get the words out quick enough. And I said, excuse me? I said, who are you to talk to her like that? Absolutely. I said, can I see that credit report? I look at the credit report. Dorothy, like one late payment. And she was explaining to him that she made it because the check came back. She forgot to put a stamp on. What I did, let's just say she walked out of there paying the perfect credit score payment. But the point is, that's the way she was made. I mean, just the things that he said, but the way that, and he was telling her loan amount, I mean, her interest rate went up 4%.
Wow.
Unheard of.
Wow.
And was trying to take advantage of her. So for me, it's not just the way, it's the way that you speak to someone, as well as the products and programs you have available to them.
Exactly.
Right. So I, of course, went to his manager and did, but the point is that it's a whole so here you have a real estate agent that has two consumers and exact same credit, right?
Yes.
Exact same profile, let's say.
Yes.
Looking in the same exact area.
Exactly.
Why is it that some real estate agents, and we know what happens, don't tell me it doesn't happen. Some real estate agents will mandate a pre-approval on one and not on the other.
Well, you see, it's unfortunately one of the things that I've been talking about a lot, and I'm trying to bring it to the forefront because we had, of course, that I'm not going to talk about this, and the steering a situation that happened out in Long Island, but I've always been asking that question because one of my pet peeves right now is the requirement of a pre-approval before you even make an appointment to show the property. And I understand that, and also you have to provide COVID, but I also think it's a lack of education on the part of the real estate agents, because I've always said, if you're going to ask for it from one person, you have to ask for it from all. Part of my testing that has had, and I've also written up a report, which I'll be submitting to Department of State, is within the multiple listing service, there are certain agencies and agents who mandate you provide a pre-approval before your appointment will be confirmed. The issue I have with that is I never have a pre-approval. I just call up and say, hey, Irene, it's Dorothy, my people don't have that pre-approval. Is it okay if I make the appointment? And they confirm it. My question then becomes, are you treating everybody the same? If you're making a pass for one person, you're discriminating. So if you're going to ask my
that's where it comes in. That's where it comes in. So for me, Dorothy, I'm going to play devil's advocate. I'm going to ask you, as a realtor, I personally, if I were a realtor, would be very uncomfortable taking clients or meeting clients in a property without a pre-approval for multiple reasons. My safety would be my first concern. If no one knows about these clients, nothing's been run on these clients. I don't even know if their names are right. Yeah, okay, they give me a license, but is it an accurate license? So for me, it would be mandated on every client because I would be fearful for my safety. Now, it would not be if I had a client of color come to me and ask, and I'm afraid of them, but I'm not afraid. I'm afraid of everybody. I'm not meeting anybody in a house until I know who they are and that somebody else knows who they are.
That's reasonable.
So I think it's important to say, keep your consistency across. I think that's the main thing. A lot of people violate these regulations and laws and because they're not keeping consistency.
Exactly.
Right.
You're
not. So some things you have the right to do, but you have to keep it consistent.
Okay. So now just to try to get into another thing, I mean, I know the realtor has to be consistent in how we treat everybody to the best of our ability, but we also do have to try to educate our consumers in our field. I always say, let's try to stay in our lane and leave you to do your job. And if I need some help or guidance on what I should be looking at, then, definitely I'll reach out to you. One of the other things I think that I'm seeing quite a bit of with regards to, and I'm going to stay within the mortgage industry for a minute here. I recently got an email sent to me by one of my agents who's working with a buyer, and let me see, the lender, and I have to get the exact email so that I can read it specifically for you because the buyer was a bit concerned. She said, well, I understand that there are different packages you can afford your clients. And I'd say it's another mortgage broker said that the conventional guidelines have been changed and the requirement now on owner occupant purchases for a multifamily, a requirement is 15% down, 5% requirement on the single family. And it's changed. So I wanted to find out if that's actually true. Have the rules changed that if I'm buying a single family home, I am required to now put down 5% and 15% on the multifamily? Have they changed? Have the rules changed?
No, so I will not say that. I would never say the requirements changed. I would say the availability to my programs has changed, because we don't know what credit unions are offering, individual lending institutions, private savings banks that do mortgages. We don't know every program out there. So again, if you tell a consumer that this is not available, it backs them into a corner, puts them back to renting. If you say to a consumer, I don't have that product, research it, you're giving them the tools to say, go out and find out. If I don't know if it doesn't, you know what I mean? Because even if Fannie and Freddie don't offer it, doesn't mean that somebody else doesn't.
That's true.
Right? So I don't like to limit. If I don't have a product or program, I just say, we do not have that product and program to offer. You know, and that's really what should be done across the board, even with lenders. It doesn't happen because we talked about that earlier in this, but it should happen because it gives the consumer, it doesn't say absolutely not, you know, judge and jury, that's it. It says to them, we don't have that, but maybe research it for yourself.
Exactly. No, that's reasonable.
Maybe go to some first-time buyer counseling that HUD offers and ask them. I mean, there's programs that offer 100% financing. Who am I to say you can't buy a house with 100% financing?
So now to stay on that point for a minute, because now I have a pet peeve, which I'd like to address with you, which is my veterans VA financing. That don't do that. Everybody's looking at us.
I know, oh God.
It's a pet peeve of mine because it's just insanity where we have buyers presenting offers with the VA certificate. They have served our country, they've got their certificate, they want to buy a home. And I know that you do offer VA financing and you can give us a quick education on that. But my position as a real estate agent, a realtor for that matter, is when you present that offer on behalf of that buyer with 100% financing, and before they even present that offer, they say, my seller's not looking for that. It is a lack of education in the real estate industry that drives me bonkers. But in your financing realm here, if we brought you a buyer who had the VA certificate or whatever paperwork, and I'm just saying certificate because I'm not sure, what sort of paperwork are you looking for? And how, one question, what sort of paperwork are you looking for from that consumer in order to move them along in the loan process? And how would you educate us real estate professionals to be able to do the right thing on behalf of this buyer with the VA financing option?
Great questions. Great. So the paperwork that we need from VA consumers, we can walk them through obtaining their forms that are necessary to find out their eligibility. We do that all day, every day. We are USA Care certified offices, so we work with veterans all the time. One thing I want to make clear is there is no veteran lender. There is no veteran lender. It's not like that. These certain lenders that have, you know, USA in their name.
Exactly.
There is no veteran lender. Okay. It's not that you can, any lending institution will lend to veterans if they have their VA certification, but it's not one specific lender. Okay. So we can assist them in obtaining their forms and their eligibility. Once we have obtained that, there's a formula that we do to qualify them. They do have amazing regulations as far as like criteria. It's actually a better criteria to qualify. There are things out there like grants to veterans that have disabilities. So if they want to renovate their property, we'll give them all of their options. Okay. The way that the most informative way to do a veteran loan is to discuss with the veterans and the real estate agent and the attorney, keep everyone on board. Because I'm a fan of when you start the home buying process, you have your team in place. right? So you have you've interviewed, and that's important, interviewed your loan originator, your lender, your real estate agent, your attorney, and you've put them all on the same, and you're comfortable with them. You shouldn't enter into something like this without having a comfortable team of experts.
Excellent.
So I'm really a fan of starting with that. So now you have this team, you've introduced everybody together. So now my office and my team and my loan originators that work for ASAP will communicate with the realtor and the attorney and saying, this is 100% financing. How do you feel about that? Now, as a realtor, what might you say to me?
I don't feel anything about it. I shouldn't feel anything about it.
But, right. But when they're placing an offer, is there the conversation of the seller wants a down payment?
Well, yeah, that can happen all day, but I've done that in the past where I've got a VA buyer and I always communicate to that listing agent that it's 100% financing. Now, if the seller wants some sort of a binder, they'll put down $500, nothing more, but they don't have to.
Right, they don't have to, but we discuss that with them. We explain, because part of doing due diligence is you don't want to give someone a pre-approval letter and then have them out there and never getting their offer accepted. You want to educate them on what could happen. Yeah. And you want to educate them on the discriminatory tactics that can happen as well.
Exactly.
So they're aware of them. So we do have that conversation. And some of them say, I want to put down a good, if they're paying their closing costs, you know what, Laura or Jen or whoever loan officer they're working with, I have $5,000. I'd like to be able to put it down. Because I'm going to use it for closing costs anyway, but I want it to go towards closing costs.
Exactly.
So that's a conversation you have to have with everybody, because what happens is if they do get into a transaction and they do sign a contract that does require a down payment and they don't have that down payment, it becomes a problem.
Yes, it does.
So you do have to educate them and everyone in it, because I don't want you going out searching properties thinking in your head, oh, they're going to put money down. No. Even though it's 100% financing. You know how many calls I've gotten recently from agents saying, you got to change this pre-approval. You can't have FHA on there. No one's going to accept an FHA.
That's insane.
They don't realize it's a violation to say
it's
that.
It's a violation of the law.
And it's also for the loan originator. I've lost, when I say we all know I don't do mortgages. I'm talking for my team.
Yeah.
My team has come to me and said, Irene, we lost a deal to a competitor because they have changed the pre-approval letter to conventional financing from FHA, when we know in our heart and on paper that it is not a better deal for the consumer.
Yeah.
They're paying higher PMI, they're paying a higher rate, so it's not a better deal. But they're doing it because the realtors are asking them to, and that's a fine line.
That's outrageous.
Exactly. So it's really got to be, now if the consumer says, I want to take a conventional loan, I understand all the factors, I want to take that loan, then the team will say, okay, that's your choice.
Well, but that means as a consumer, I've made an educated decision. I've been given.
We'll provide them with a loan scenario explaining exactly the differences line by line next to it, saying, this is what this is going to cost you. This is what this is going to cost you. This is the cash needed to close for this. So they have that educated decision, and the loan originators will review that with them. And I'm speaking for my team. I'm not speaking across the board. It's not.
We're dealing with ASAP Mortgage.
ASAP Mortgage. My team is, fully on board with every value that I have, all my ethics, and all of the rules and regulations of what fair lending is. And I can honestly say that, Dorothy, I handpick my team.
Absolutely. Yes, you do.
People come to try to work for me that I will not accept. I handpick my team, and they are the best of the best. I mean,
it shows in the care they give and provide to both as a real estate agent and to the consumers that they work with. It shows, but any sort of leadership is always from the top down. It's reflected, they have the education, they explain things, they are very caring and empathetic to the situation, but it's because you put that on display. If you were one of those owners of a company that cuts corners, it will be reflected in the sloppy work that's put out there. So it's all a credit to you.
Right.
I'm going to have you wrap up our session here because I want to give you the opportunity. For those of you who don't know, Irene wrote a fabulous, fabulous book. What is the title again, Irene?
Home at Last.
And when is it going to publication?
June. Well, it'll be finalized by June. It'll be in Barnes and Noble and Amazon and bookstores, and I'll do some book signings. And a little bit about this book is it started out, for those of you who know me, I am a motivational speaker. I am very driven by the universe and doing unto others as I want done to myself. And I practice that every day. And when I say practice, no one's ever going to be perfect. We're human beings, but it's very important to live by that rule for me. I was on the other side, years when I was a child, and it's not a fun side to be on. And I know the feelings of how people can feel when they're being mistreated and put in a special box, right? So when writing this book, right, I love mortgages. My passion, that's my passion. And I identify my passion in the industry as really wanting to help others, right? That's probably why I got so involved in fair lending and sat on committees and was a big part of this because I such an advocate for fair lending and fair across the board. So for me, the book started out as a leeway to my passions, mortgages, right? Real estate industry, because by the way, real estate is, if you're into lending or mortgage brokering, real estate has to be a passion of yours. I started out at 12 years old giving out keys at Gloucester Realty. I'm so dating myself right now, and I loved it. I just loved seeing the people's faces when they walked in to get the key. And I would always be interested. Did they rent that apartment? So I find that I wanted to put both of my passions together. So I hired this amazing writer and we sat and talked, and it took a while because I really had to articulate like what I was trying to get at. And then I had to cross the line and say, make sure it was acceptable to say, right? You have to watch everything and make sure you're getting it out the right way. So I added my life experiences to this book that drives me to feel the way that I do and act the way that I do in the mortgage industry. So one quick story is like, for instance, the client of mine that called me up and said, he was waiting to close. We had a glitch in something in his income and I was taking care of it. I was on vacation in a retreat where you can't use your phones. Dorothy, you know where I was. And I called him, in the parking lot because I knew that the sound of my voice would calm him down, right? He needed to hear that. And he proceeded to say, you don't know what it's like to be homeless. And I said, whoa, back it up.
Exactly.
I know what it's like to be homeless at an age where I couldn't help myself. So you're in good hands. I got you. He instantaneously, completely turned around and said, thank you for being so vulnerable with me. I appreciate that. And I know you got me. And later on that day, we cleared him to close. So that's the type of stories you'll read in this book. And Home at Last started out to be just an educational tool. And it turned to be more of a life story mixed in with how and raising the bar in the industry of how you should expect to be treated, whether you're purchasing $1 million property or you're purchasing your first $20,000 co-op. It's not about the dollar amount. It's about the respect and how you should be treated across the board. Race, religion, ethnicity, anything. So that's where the book drives you to, and it gives confidence to these individuals that feel that they're maybe being discriminated against, to educate them, because knowledge is power.
I absolutely agree with that. And I also have to say to those listening, I proofread this fabulous book. I couldn't put it down. I couldn't put it down. I made notes in the margins. I highlighted and I underlined stuff. And I had to have a conversation with Irene about it. The good thing, I've known Irene for a very long time. And the good thing about this relationship we have is that we listen to each other and we agree to disagree. I've called her at strange times to bounce ideas off of her. She's done the same thing. And we've been able to come up with something that is really great. But this book, Home at Last, is one that is absolutely riveting. It's going to give the first time home buyer an idea of what ASAP mortgage is truly about, based on their leader, Irene Amato, and what she brings to the table, what she continues to bring to the table in the expansion of her offices. How many do we have now?
Seven office locations, 8 with Florida opening soon. So
And for
7 to
those of
15.
you who don't know Irene, she's a powerhouse. She's a little bundle of petite powerhouse. Huge ideas, lots of enthusiasm and energy, and she's very supportive and an advocate for what she thinks is right. If she's not sure, she'll research, she'll bounce ideas off the people who know. But I do have to say that it's been an absolute pleasure. So do you want to wrap us up? Give us a
I
little
do want to say that the book will be available in certain communities for free. I'm not charging. Yes, if you go online, but it will be advertised. You're not going to get a free book in Barnes and Noble, but it will be advertised that you can pick up free copies at our office locations, because it's an affordable housing as far as I'm concerned. And it should be given out free to those who need it. So there will be free copies for those who need it.
I
And
hope you're going to autograph them because, come pick up a
I
copy.
will. We're going to have a lot of book signings, and I'm hoping that we'll be able to do some training together, you and I, for these consumers that need it once they read this book.
I think it'll be fascinating. Chris, I'm going to bring you in real quick. Do we have any questions or concerns from anybody at all?
We don't currently have any questions in the chat, but if anybody has them, now's the time. Put them in the Q&A section and we'll happily answer them.
Excellent. We have had a very, very informative session here. And I think, I'm leaving with quite a bit of knowledge. And the biggest thing was me, people say, well, mortgage brokers, they charge a lot, they charge a lot. So I'm glad you've been able to dispel that myth because that was informative. HUD, you mentioned HUD very briefly. What is HUD's role in fair lending?
They've implemented and will continue to oversee the regulations of fair housing.
So if you violate the law, do I go to HUD or to the CFPB?
You can go to HUD and CFPB, but HUD has a hotline number. They have an email address. They have multiple ways of communicating. You can get to one of their local offices. So there is multiple ways to get in touch with them, and you don't need to hire expensive attorneys and to advocate for you. They will provide it once they, usually once they have gotten involved, they will send a letter out, and if they deem that letter usually will take care of what needs to be done. But of course, you can take civil suits and things like that.
Okay, that's really
So I
good.
do want to reiterate that our office location, should you want to discuss anything, you can always reach out to me directly, but you can also go to any one of my office locations. We have a Bronx office location. We have a White Plains office location. Bronx is Laura Shall is the manager. White Plains is Betty Jablona. We have a Croton office in Croton on the Hudson, which is Nancy Meserole. We have where I am now, which is Peekskill, our newest location. Well, Orange is our newest, but Peekskill is our headquarters. I'm here most of the time. I bop around. That's Peekskill. We have Fishkill, which is on John Ferrara is the manager. And we have Cortland Manor, which is Doug Petrie's the branch manager. And we have Orange County, Sandra Salgado is the branch manager, and Clarissa Charoux will be opening in Florida. So you can reach out to any one of our branch managers, any one of our loan originators. If you visit asapmortgageinc.com, go to the Meet the Team, look up, read their bios, learn about them, and I encourage you to work with them because you will be working with the best of the best in the industry, in my opinion.
And I want to thank you for your time here. I know we are a bit ahead of schedule, but I don't want to beat a dead horse, pun, sorry. But we have covered what we needed to. Irene, what is your email address again and your phone number to the headquarters where they may reach you?
I would say send your emails to info, INFO, at ASAP Mortgage, MORTGAGE, Inc., INC.com. And you can call 1-866-THINK ASAP. That's 1-866-THINK ASAP to be directed to any loan originator, or you can ask to speak directly with me.
That's fantastic. And to everybody who joined us on this webinar, we want to thank you for your time and attention. I am sure you're leaving here having learned something. And if you're not sure, please feel free to reach out to our mortgage broker extraordinaire, Irene Amato, who is leading by example. We can't do anything without her. She is one of the best and a heck of a supporter for our realtor industry and a great and intense advocate for her mortgage industry. So we want to thank Irene Amato for being here. We also want to thank Chris Pagley for monitoring our Q&A and our webinar. So thank you very much. And we are done for today.
Thank you.
Bye-bye.
Bye, everyone.
Chris.